What are unlisted shares? The shares which are not listed on the formal stock exchanges are referred to as unlisted shares stocks. For instance, Jio has unlisted shares, Ola has it as well. Similarly, many companies are yet to go public as they do not comply with the requirements for being listed on a formal stock exchange. They are less transparent but with more stable valuations. So, if you can pick an unlisted share that has all the potential to get listed and the company has growth potential, your returns can be amplified enormously from that share. Difference between unlisted and delisted shares. Unlisted shares shouldn't be confused with delisted shares. Both of these types of shares are completely different. While unlisted shares are those which are not listed on the stock exchanges yet, delisted shares are those which were once listed but dropped out from the listed shares category due to certain reasons. You can trade and invest in unlisted shares on OTC markets, but you cannot invest or trade any delisted shares. Delisted shares are not available on any platform, whether it is formal stock exchanges or OTC. Companies have unlisted shares when they may not have plans for issuing IPO or they do not meet the requirements of SEBI to list the shares on any stock exchange like NSE or BSE. On the other hand, companies have delisted shares when they either do not adhere to any disclosure guidelines provided by SEBI and stock exchanges and thus they get delisted from stock exchanges, or the management of the company wants to delist the company itself. Unlisted shares valuation. The valuation of unlisted shares is done following the fair market value (FMV) method. Since they are not on the stock exchange and thus no actual market price exists for unlisted shares, FMV is calculated by the underwriters or the investments bankers. For calculating the fair market value, the book value of all the liabilities of the company L is deducted from the book value of all the assets the company A possesses. Then the amount derived is multiplied by the paid-up value PV of equity shares and then divided by the total amount of paid-up equity share capital pay as per the balance sheet of the company. Tax implications. Since unlisted shares are different from listed ones, the tax implications are different as well. Unlisted shares if sold within 24 months, then short-term capital gain tax is applicable on the profits and thus taxed at marginal tax rate. However, if it is sold after 24 months, then long-term capital gain tax will be applicable at 20% and you get the benefit of indexation as well. However, the profits are calculated as per FMV until the shares get listed on any formal stock exchange. At Futurewala you can able to check real-time live rate of unlisted stock. Now you can too buy unlisted stock at our website, www.futurewala.com. For more details click below link in the